Dave, have you been fishing this summer?
God, unfortunately I have not fished one time this summer, and I need to. But I am going to Montana next month. Get a little fishing in.
Good.
Because you
Well,
were in Oregon, Dave, and then I think you said you moved back to, or you were in Southern California. You're now in Southern California again?
Yeah. 2.5 years ago, we moved back to Orange County, but I raised my kids in Oregon and lived there for about 12 years.
I remember having a bunch of lacrosse, youth sports conversations with you. Well, I was embroiled in the baseball world of it, but that was all up in Oregon.
Yeah. When we moved to Oregon, it's a big sport in Lake Oswego. I think someone told me that more kids play lacrosse than baseball in the city we were at. So it was a big sport. We had a great time and a great place to raise kids. And I fell in love with lacrosse.
It's awesome. Very cool. It is an emerging sport. So
No doubt.
lacrosse?
I played football, track, and wrestling. And if I would have known about lacrosse and had the ability to play it, I would have made that my thing.
awesome.
Is that a sport that you can play in the rain?
You have to play it in the rain. I mean, you can, first of all, Rob, I know you're a NorCal guy, but you can play every sport in the rain. And in Oregon, like we don't have rain days. Like we play all sports.
Even baseball?
Well, I guess baseball players, no, yeah, you probably couldn't play baseball.
And basketball is indoors anyway.
Yeah,
No.
but yeah, you can play it in the
All right.
rain. The only thing that stops it is if you're going to screw up the field and so bad that the field's going to get damaged, they'll call a game.
All right. Let's go ahead and get into it. I'm Rich Swerbinsky with Onward and Upward Consulting. This is the Big Picture, part of the Chrisman Commentary Network of shows. And as always, pleased to be joined by my esteemed colleague and co-host, Rob Chrisman. Rob, looks like
Hello from Orlando, Florida.
I was going to say, it looked like Florida palm trees in the window behind you there. So
Oh, it's raining. I don't know if you can see it's pouring outside, but anyway, we're Floridians are used to that.
Floridians are used to it, yes. And this week, very, very pleased to be joined by good friend, the founder of Mortgage Coach, the chief innovation officer of Trust Engine, Dave Savage. Dave, thanks for joining us today.
Hey, it's good to be here. Thanks for inviting me. I'm excited about the conversation.
Should be fun. There's so much to talk about. Really excited to get your perspective as somebody that's been really interviewing many of the top names in real estate finance on your YouTube channel these last several months about the impact of the NAR settlement fallout changes. Really excited to get your just feedback from that experience. And we'll definitely get into that as we get into the show. So, but Rob, there's so much going on right now. We've got the NAR settlement changes now in effect. We've, of course, got the big Jackson Hole speech for Jay Powell coming up this Friday, amidst the backdrop of a big employment revision, 818,000 less jobs. The Bureau of Labor reported their annual review, kind of April to April, 23 to 24. So that obviously made some headlines. So we got that going on with the Jackson Hole meeting and speech coming up later this week. Vice President Harris put out a bunch of different housing related proposals, first-time home buyer down payment assistance, tax credits and tax incentives for builders to build starter homes and other things. So Rob, I throw that all at you and ask you where you want to start with all that this week.
Well, I think we're going to talk about the National Association of Realtors. There was a session here earlier at this NAMBA event about that. And they also talked about it some at the Western Secondary a couple days ago. And then before that, the Michigan Mortgage Lenders. That definitely, the opinions definitely range between much ado about nothing all the way to, oh, this is a fundamental change in the way the business is done. Frankly, my opinion is I think the realtors will figure it out. Nobody wants the first-time home buyers to suffer. I think that the buyers need somebody in their corner, especially if it's a first-time home buyer or somebody's changing. moving to Florida, for example, gee, are these palmetto bugs normal? Is this mold on the wall normal? You need somebody on your side, but I think Dave will address that. He's much better, much more well-versed at it than I am. Jay Powell, gee, I think anybody who follows the Fed to some extent, Rich, you could probably get up there and give a Federal Reserve, chairman of the board speech. We're continuing to watch the economy, we're watching the data, we're data driven, and point, blah, 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 blah. I don't know if he'll say anything earth shattering. And the a lowering of Fed funds and next month on the 28th or the 18th, I guess it is 18th, pretty much baked into the market. And now, for the next 3 weeks, we get to hear a lot of jawboning about whether it's going to be a quarter or a half, but it may not have any impact on mortgage rates because I think that's priced into the market. So, what was the other thing you mentioned? Something else that's going
Vice
on.
President Harris's housing proposals.
There's that's an interesting topic because a cynic would look at what's come out of the convention saying there's no talk of any budgetary restraint whatsoever. They talk about spending a lot of money. And our budget can only handle so much of that. But other people will say, well, what she's trying to do is promote housing. And I would argue, and I'm perfectly open to criticism on this, but if you give everybody $1 million, that just raises the price of a first-time home by $1 million, right? And even if rates were 0%, it would still drive up the price of first-time home buying, and then the press would have complained about the affordability because rates are 0% and everybody wants a starter home, and so the price goes through the roof. It's a very difficult situation. So I'm kind of a free market guy, and I think rates are where they are for a reason. And I don't think we need more government spending to promote first-time home buyers. I lecture audiences coast to coast, Rich, about the Symposium plan, about how you should incent people to sell homes rather than incent them to buy homes.
Well, Rob, you'll be pleased to hear I got a phone call yesterday from a good friend of mine who's very active in the advocacy side of the industry, meeting with his local representative who is on housing, boards and committees, and proposed the Swerbinsky plan. I don't think he used that terminology. And they ate it up. He begged the guy for follow-up information, said, I don't know why we're not thinking about this. This makes sense. So maybe more to come on the Swerbinsky plan.
I think we do need to keep that nomenclature because we had the New Deal, we had the Manhattan Project, and now this. So
good stuff. Well, Dave, with you, I want to start with the NAR.
I don't know if Dave knows the details of it.
The Swerbinsky. Well, it's basically, yeah.
By the way, I was going to go there. I need to know, unpack that, because when I heard it, I had ideas like, hey, does it include blank? So give me the deal.
Basically, it's, just a proposal that owners, non-institutional, let's just for argument's sake, say you own 10 or less of investment properties, you waive or reduce the capital gains taxes if you sell your non-owner occupied property to an owner occupant. And, to me, it's going to put a bunch of inventory out there that is the type of inventory we need here in America, a lot of lower priced stuff in communities all across America. And, the government would certainly forego some tax income. But outside of that, it also, I think, takes care of something that Vice President Harris is talking, just institutional ownership percentages in general was one of the parts of her housing policy, was kind of to crimp down on that. So it would serve that master as well. But so we'll see if it gains any traction.
So the caveat I would add to that, I mean, I love the idea. I mean, it makes perfect sense, but I would try to put more incentives on the first time seller so that we're releasing more first-time home buyer home inventory into the market and put less incentives on, that higher move up buyer. Like, they don't need it. They've
No, I
got tons
like
of
it.
equity, but
Mhm.
anything we can do that like, let's face it, America's built on growth. The American dream is home ownership and financial freedom. And I do believe that moving up at the right time matters. The only other kind of negative side of that is when you really look at the people that have accrued wealth in America, they bought their first home and then they kept it and they bought another home and they figured out how to play that forward. So I would be in favor of anything that did that and required some education. Some, like if you're going to get this incentive, you need to go through some educational process that creates someone who's smarter about money and someone that's smarter about real estate. So
To
those are
boost
my
their
thoughts.
IQ.
Boost their mortgage IQ, boost
You're
their real
involved
estate
in a
IQ.
cool project that we're going to get into right along those lines as well. And I couldn't agree more. The guardrails that you mentioned, and yeah, the requirement that you participate in some sort of home ownership education. Yeah, only a good thing. So, but
Well, let me know if you want me to lobby the Hill for you, man. I'm ready to go.
we'll see. It's just a one meeting with one politician, but I was pretty excited and I couldn't wait to tell Rob about it today. So
Yeah.
but,
Yeah. Well, Rob, you've got like the biggest community. You should start really advocating for that because the mortgage industry needs
I'm going to make a note of that now.
we need more leadership. We need to be louder around things that matter. And let's face it, the government officials are not coming up with the right ideas. I'm with you. I'm a free market guy. And so we need to come up with ideas and then we need to just broadcast it.
I'm going to include Rich's email in that.
I can include you as a co-sponsor. We can call it the Krzyzbinski plan.
No, I'm good. I'm good.
Well, Dave, you've spent months on your very popular YouTube Mortgage Coach channel, speaking with very influential people in real estate finance space about the NAR settlement changes, and now they are enacted, and just a handful of days into it. But really excited to just get your perspective on that journey, the general takeaways of all the people that you spoke with, and any anecdotal stuff from these last 5 days that you've seen or heard, and yeah, just any other insight on what is a really pertinent issue right now, obviously, in housing, and a big change for how people buy and sell homes.
Yeah, no, I've been interviewing a lot of folks, just one, trying to be smart about it myself, and then two, to try to help the people that follow Mortgage Coach and that are part of our community have a competitive advantage. I'll start by saying I agree with Rob. The industry is going to work it out. It'll work it out. Also, when I interviewed Tom Ferry last week, he made a point that, hey, this is going to be the chance of a lifetime and really good for some people and not so good for some people. And, some things that I believe from all the conversations I have is that it will professionalize and improve the people in real estate that deliver great experiences, that are the best will do better. And people that are part-timers, it'll be a lot harder to be an amateur in the real estate space, which I think we all could agree that's good. I think I have been surprised at some of the people in real estate that I've interviewed that don't really get what's going to happen. To me, at least a decision I've made that I believe from the interviews that I've had that when buyers are making offers on houses, at some point, and maybe sooner rather than later, they're going to be blind as to whether or not the seller is going to pay the buyer's agent's commission. So even if it happens, 90% of the sellers in the market pay commission just as they always have, which I don't think will be the case, but let's just say it happened. When the buyer's making an offer, they're going to be blind. They're not going to know that. And so they're going to have to, agents don't know that. I mean, I've interviewed some really high-end, super successful agents that didn't have that memo a week ago. So to me, that's a really interesting thing. Any thoughts on that or any opinions either one of you guys have there?
I mean, yeah, I think it's clearly going to lead to a lot of change would be, my general opinion on it. And I think anybody that doesn't think that is, kind of flying blind. It's going to be
Well, there's
interesting.
change for the, if I could interrupt,
Mhm.
there's change, Rich, kind of a generic change, like to Dave's point, like this will help some and not help others, and may result, saying a lessening of the number of real estate agents that are out there posting their high school prom photos. But the when you get into the nitty gritty, and those are the discussions where I get a little bit confused in terms of forms that need to be filled out. Uh, Fortunately, Fannie Mae and Freddie Mac, shortly after the settlement was announced, uh, came out and said, addressed the seller contributions and so forth. But when you get into the nitty gritty, I think that things I start to get confused. But uh, so I wanted to get your point, Rich, about you definitely think there will be change, big change. Well, like when you talk about big change, what are you talking about?
I think mortgage lenders are going to be much more involved just in that part of the home purchase process because, I think buyers are going to go to mortgage lenders to get pre-approved and they're going to start asking the LO about, I mean, a lot of times you go to the LO before you start, maybe you're looking at homes online, but maybe you haven't, chosen an agent yet. So I think a lot of lenders are going to see that. You could see like a more like even almost like reverse marketing services agreement. Like historically, lenders have, you know, paid real estate brokerages monthly to market their services to their buyers. I think you could see, honestly, quite frankly, the flip side of some of that. I think you're going to see mortgage lenders that have all these LOs that are having these conversations with buyers like, man, why don't we just like hire a realtor or why don't we perform this buyer's agent services ourselves? So I think you're going to see some of that. If I had to guess, I'm going to guess like if you fast forward like a year and a half from now, like almost a 25 to 30% of mortgage lenders, I think, will be offering some sort of buyer's agent services, which I think in and of itself is a pretty fundamental change for the mortgage and real estate industry.
Yeah. Yeah. And
Well,
the other thing you're seeing, and I don't know what the percentage is, I'm not going to make any guesses today. I'll start making guesses at the end of the year on how it's really going to play out. But you're already seeing mortgage companies bringing real estate agents into the mortgage experience and providing them with compliant compensation. I interviewed one of the top teams yesterday. It'll be on our YouTube channel any day now with Mutual of Omaha, who has a strategic partnership with Zillow. And, they are at scale bringing, Zillow or not Zillow, but Keller Williams agents into the mortgage experience in a way that, is compliant. So that will continue to be a trend. And I know a number of other companies. I'm not going to mention them just because that was spoken publicly. It'll be on our YouTube channel. But there's a number of companies that are doing it. And, when I have C-suite conversations with customers, everybody's looking at that, so that's going to be a thing. And there's definitely going to be a merging of housing, mortgage and buying your home are going to, have more handoffs earlier in the process. I think that's a given at this point.
so I was just on a panel with a guy named Brian Hale, who
Yeah.
probably many of the folks on this call know, and Mitch Kiter, a well-known attorney, and this subject came up. And Brian was saying, and he operates a consulting company, and he was saying he has a client that has signed up 200 real estate agents, uh, some kind of venture, but only two have produced a single loan. And he said the licensing has been a huge, the licensing and the test taking has been a huge thing for real estate agents to say, geez, this is something I really want to do. And skill set is another. He said the company has run into a skill set challenge because a real estate agent's skill set does not necessarily match that of a loan officer's skill set. So Dave, I'd be interested in hearing your thoughts on licensing and or skill set overlap and work
Yeah.
hours. You know, frankly, work hours are, I mean, what loan officer wants to be fielding phone calls from a borrower at, 5:30 on a Saturday night?
Yeah, no, I talked to Brian a lot, and I don't know exactly which lender that is, but we have a number of lenders that are doing this, and they have found when it comes to getting loan officers to use the right technology in the right way at scale as hard. And what I'm hearing reported back that it's even harder to get real estate agents to do that at scale. It's hard. And then when you look at the number of real estate agents that actually sell homes, it's not a lot. I mean, the majority of them don't actually sell homes. And when you look at the amount of realtors that sell a lot of homes, according to Tom Ferry a couple days ago, and the data that he shared, I can't remember the exact number. I want to say the mark was like 45 or more. There's like 400. Now, those are teams that probably have multiple realtors underneath them, but there's not a lot of people selling a lot of homes to where if you plug them into the mortgage process, there's going to be a lot of loans, I think, to the point. So I don't think that's being ignored by anyone. Like, I don't think anyone is just being naive to that. But I do think there is a way in which you can kind of divide up what is a realtor who wants to be in the mortgage game and be part of an effective system. How do they get involved? What do they need to do? And then who do you hand that off to? It may not be a loan officer. It may be like a really senior processor, someone that's really good at transactions. Because let's face it, most loan officers don't really take great apps, and they're more salespeople. So I would just, any C-suite executive watch this. I mean, there's an opportunity to look at housing, buying a home, selling a home. How do we use mortgage, create a more effective workflow that's also a more effective customer experience? There's an opportunity. I don't even think the way we do it right now is best practice. Like, if loan officers were really delivering a best practice mortgage experience to consumers, they wouldn't be giving a fee worksheet. They would be giving a mortgage coach total cost analysis. They'd be giving more value. So there's just a lot of opportunity to optimize both workflow and customer experience. But I do think realtors are now in the game on the mortgage side, and I do think mortgage is now in the game on the real estate side. And it'll be interesting to see how different companies play the game and win the game.
It'll be, yeah, time will tell. I view it, Mitch brought up the compliance, the potential compliance pitfalls. And when you're the Consumer Finance Protection Bureau and you are dealing with a lender on issues, are they going to be dragging real estate into this? Or is the CFPB going to expand and start to look at real estate companies and the interaction between a combination realtor and loan officer and their client? Are they doing that in a compliant way?
Well, Mitch is the guy, and my advice is to anyone listening that's getting into that, no one better than Mitch to help you navigate doing that right. And I do, in my last couple of conversations with Mitch, I mean, he feels that more risk is coming our way, regardless of the NAR settlement. This more enforcements and doing things right is the stakes are going to be higher than ever not doing things right.
And being honest, I mean, I think which way the election goes in November is going to dictate a lot
Yeah,
of the
fair enough on
direction of
that.
this. I mean, if the Democrats stay in office, you're going to have an entrenched CFPB that's getting a lot of things done now and has been in there for 4 years with really, aggressive leadership. And even if the Republicans win, that's the agency will exist in building and name only, really, as we saw the last time. It'll just be a really different climate. So what about dual agency? I think there's 8 or 9 states that it's illegal in, just completely illegal in, if I'm not mistaken. But comment
nine as of 9 currently, and I'm hearing that that will continue. But I mean, isn't that the dual agency really relating to the realtor being able to represent the buyer and the seller,
Yeah, yeah, exactly. So I think you're probably going to see a lot more. I mean, the same way that I think mortgage companies, even as you mentioned, Dave, there's a lot that are already doing it already or working towards it. I think there'll be more that, once their LOs start talking to people and have these conversations, that'll get convinced to get into it. I think you'll see the same thing on the real estate side where, you're going to have, listing agents that will, in an ideal world, just want to hand it off to somebody at their own brokerage that they know they can, that's kind of why it's not, it's not viewed as a best practice for a home buyer. But yet it's legal in 41 states. So I'd be curious to get both your guys' thoughts on the proliferation of that. How much more dual agency you think we'll see going forward?
Well, Rich, it's like anytime a rule or regulation pops up or any kind of restrictions, you have tens and tens of scores of thousands of people looking at that, trying to figure out some way around it or some way to profit from it. And I don't know if legislators or regulators can really keep up with some of the things that may happen with this. But yeah, I would agree with your earlier statement and Mitch's point is that the risk continues to increase for lenders and for real estate companies in terms of in the financial services sector. So it's not, I hate to lament the fact that the days of, Dave and Rich starting a little mortgage company and away you go. And, you're just trying to help the borrower. There's so many layers of rules and regulations now. It's only going to increase, unfortunately. So it's good to have a good compliance person and a good attorney. So anyway, sorry, Dave, you were going to say something.
No, I mean, I on the dual agency thing, I lean towards it will, more and more states will adopt, outlawing that. I mean, it's not good for the consumer. And when you really look at, a major consumer trend that's taking place, and not just in the mortgage space, but, when you look at everything, more transparency for consumers, more power to the consumer, both technically and from a consumer. And so, not allowing dual agency where an agent can represent both the buyer and seller, it doesn't make sense. It's not good for the consumer. And so I think it's good business practice not to do it. It's opportunistic when agents do it. I don't fault them. Like if it's legal and it's opportunistic and you feel that you can navigate that, hey, no fault, like no shame to do that. But I do think sometimes regulations are good and dual agency does not serve the consumer's best interest. It doesn't serve the seller's best interest. It certainly doesn't serve the buyer's best interest, in my opinion.
If I had to guess, I think you're going to see that CFPB's put out a lot of enforcement actions recently, like these last few months. Not really on the mortgage side too much, but just, across the spectrum of financial services. And, they're trying to finish up things they've been working really hard on for these last 3.5 years and, put some shots across the bow out there. I would almost guarantee you're going to see a RESPA enforcement action of some sort in real estate finance between now and Halloween. That, if you're Chopra and, this real estate, all the changes, it's been just everywhere in the news, and housing is so front and center right now in America. Kamala's making it a big part of her platform and kind of forcing Trump to talk about it now. I just think that if you're Rohit Chopra, that would be, and you have an enforcement action to make in that space, it would be really effective to do it now to kind of get people's attention, like they did with Lighthouse Title back in, what was it, 08, and PHH. I think Mitch Kiter won that case for PHH, if I'm not mistaken, Rob, right?
Yeah. Yeah.
Lighthouse Capital. Rich, you pulled that out of the archives.
Lighthouse Title. Yeah.
Rich would be very, very proud of you for that. And by the way, that's a pretty big bet to say between now and Halloween, a big case is going to go down. So everybody, you heard it here. If anybody wants to put odds on whether he's right or wrong, put it in chat. I'm not going to take that bet, but I would not bet against you either because your logic is sound. But to pick something like that within that window of time, that's pretty bold, man. Pretty
Yeah,
I
bold.
think
they
there,
could be
the,
November,
there is
you know.
there is the feeling that the CFPB is going to push up, is going to rush some of these things through ahead of
Oh, for sure.
potential change.
For sure. I'll take that bet. I'll take the Christmas bet.
And to be clear, I have no inside information. It is purely just speculation, but
It was pretty good.
we'll see how it all plays
Well,
out.
just make sure when something hits that you bring that into the show and make it a topic.
Yeah.
Rich, where do you think Ohio is going to go in the election? I know we've got more than 2 months to go.
I mean,
So
it's been it's been a 50-50 state. It decided the winner like every year for like 60 years. And then it broke from that, I think, in one of the last couple elections, but it's been Republican, but now it's in play. I mean, it's one of the states that, I don't think the Harris campaign, or the Democrats thought they could win and weren't investing a ton into. And now I'm going to be subject to lots of commercials, it feels like. So
You can't get on the do not call list.
I'm sure there's a way to do it. Yeah, I probably should. But I watch a lot of sports on TV.
There you
And
go. Yeah,
there's
you're
no way to
gonna
get
get
away.
hit. You're gonna get hit hard.
Yeah, there's no way to get away from it. It's the last bastion of us losers that actually watch commercials because we're such sports addicts. So, but and good segue. Some of the policies that have been espoused by Vice President Harris. One of them, down payments assistance, 25,000 first-time home buyers, wanting to help 4 million families, and also a tax incentive proposal, all sans detail, of course, but broad brush for builders. The National Association of Home Builders replied. It was very interesting to me. You'd think they would be elated that they brought it up, but it is a very partisan organization. And they were like, we applaud Vice President Harris for making it centerpieces of her campaign, and then just shit all over it for 4 paragraphs. I was really a little shocked by that. But any thoughts on any of that stuff that came out, Dave?
Yeah, so I mean, I'm all for taking the affordability crisis in America super serious and doing things to do it. I mean, of course, I believe that education and empowering America is the most important thing and the best way to address the affordability crisis, because I do think if people are empowered young, educated young, build habits that help them, they'll do it the right way. That said, I'm a free enterprise guy, and I kind of like what Rob said earlier. I mean, you look what some of the subsidies and student loans have done to higher education in America, and I don't know exactly what's proposed in enough detail to be critical of it, tactically, but conceptually, it sounds, really concerning that it would have the opposite effect and would not address education. Now, as a whole, down payment assistance in America, I think, is a good thing. I'm a big fan of down payment resources and the way they've democratized all the different down payment programs so that people can, go to a website, they can see what's available to them. And I think there's a lot of great programs in America around down payment, but usually they're pretty thoughtful. And that's my other big issue is I think real estate is local. It's a local business. So it needs to be addressed in a local way. And anything that would be national, I just think would be really difficult. So I applaud attacking the issue. I just am concerned that it was more of a political ploy than it was a real thoughtful solution to a really big problem.
Yeah, and again, it was lacking details, and it would be hard to fathom down payment assistance of 25K where you're not asking the recipient for something. And to your point, Dave, home buyer education, it's you have just a horde of wannabe home buyers out there that have been on the sideline.
Well, and how does that apply to like coastal California? And again, I'm not going to start calling out specific markets. And who knows, maybe it did have some real thought about the locality and the affordability in different markets, but it did not seem like, anything more than, what do you call that? Political filibuster or whatever. It didn't sound like it was the right prescription to the problem.
Yeah. And it was right before the DNC, and, she hadn't put a lot of policy out there. So I think they had, was kind of just putting some base layer stuff out there without a lot of detail that, some red meat for the masses. And
Well said.
yeah.
Some red meat for the masses.
But on the home buyer education front, I would agree with you that right now it's very critical. It's, a home ownership, the biggest predictor of wealth in America, and you have so many want to be first-time home buyers out there. I could tell you they're drooling over Zillow all day. I guarantee they're not drooling over information that would make them more astute home buyers, would be my guess. And Dave, you're working on and heavily embroiled in a very, very cool project called First Home IQ, a nonprofit home buyer education platform. Tell the listeners a little bit about that, because it is a super cool initiative.
Yeah. So, I mean,
Time out.
Go.
Rich, that was a masterful transition into this topic. That's one for the textbooks right there. You teed it up so well.
Cut the clip of that one.
I was even like, wow, this is great. Anyway, go ahead, Dave.
All right. Thanks for the better tee up, Rob. So I mean, anyone watch this, you guys are in housing, so we all kind of know the data that the wealth, front line of the wealth gap is who owns versus who rents. But until I took on this project, I really didn't start unpacking, just how big of an issue it is, and also how much I believe it is a solvable issue. Like 16-year-olds are not at scale learning about money, learning about saving money. 18-year-olds are, before they get into student loan and start getting solicited by credit cards, are not learning about credit score. Heck, most people never get formal education around how their credit score is going to
They're
impact.
idiot. I live with a 16, 17, and 18-year-old.
Yeah.
I can attest.
Yeah, but no one's
idiotic.
no one's bringing it to them. And then most people don't know how home appreciation works with real estate, with a mortgage. And so, the whole thesis we have at First Home IQ is that governments aren't going to fix it. Higher education isn't going to address it. And the mortgage industry, like, we can do it in a way that's purpose and profits. Like, if we really started providing a little bit of financial literacy in a thoughtful way, every time we ran a credit report with someone, we put them through a process. If we started thinking about our database beyond the transaction, like, by the way, this also ties to the NAR settlement. Like, I think both mortgage and real estate need to stop playing the 3-month game, like, who's most likely to buy now, and I'm going to market them, I'm going to sell them. But we started playing the 30-year game with people, and like, hey, we're going to really educate you around how to build wealth and financial freedom with real estate. Like, we'd make more money, we'd do more loans, we'd sell more homes, and we would also help address a real issue, which is financial literacy in America. So anyways, nonprofit for the industry, by the industry, to thoughtfully provide education to Americans around homeownership and homeownership readiness in a thoughtful way. That's what we're doing.
It's awesome. And for those watching the YouTube or listening on the podcast, it's firsthomeiq.com, or just Google First Home IQ. Very cool project Dave's involved in with Kristen Messerly, very well-known, well-respected leader in our industry, speaker that has been involved in a number of really influential projects and working on it together. And again, just as a nonprofit, they're looking for ambassadors to kind of help with their journey with this project. And I encourage everybody to check it out and get involved if you're able. So
yeah, thank you. Appreciate that. And by the way, the small ask is there's a quiz. It's called the First Home IQ quiz. It's free. It's like 20 questions. People in the industry who take it usually get above 80%.
Dave, you need to email me. Dave, do you still use email? Dave, email me. Don't text. Email me that link, and I'll put it out there. I would think it would be fascinating to see how people in the mortgage business do on something like that.
Yeah, I'll send it to you. They do pretty well, but the thing is, Gen Z is averaging under 50%. And the aggregated average is like 57%. But
Wait a minute. Dave, Gen Z, I mean, aren't they more concerned with like where to get a cool bong than home ownership?
and by the way, the goal of the quiz is not only to assess where someone's at, but by taking the quiz to elevate where someone's at. So it's an educational quiz that's the tip of the spear of our educational experience. It's free. It's 3 to 5 minutes. Check it out. I'll get you a link, Rob.
Send it over, email it over, and I'll shoot it out to the industry.
By the way, I'm gonna email it and text it just to bug you.
Good question.
I'll never forget, Dave. You and I were standing on the street. You snagged me, or we were somewhere, and you said, "Rob, look at this," and you were showing me your smartphone, and there was a screen about real estate values. Like if you type in your address, look, Rob, here's what pops up. And I'm like, wow, look at that. I don't remember the details, but I remember being impressed.
Yeah,
And
you
you were like,
wanted it, but you didn't know how to install an app on your phone. You didn't know your password.
I still don't.
Yeah,
I'm
I
there.
know. It was a fun moment. I still razz Rob about that. Do you know your password yet?
My flip phones can't handle that stuff.
Yeah, it's all good.
Good question in the Q&A. Rob, I'd be interested if this came up in any of the panels you've been in this past week or so on this. And Dave, if you've heard or had any discussions with anybody about this, it says, in regards to realtor fees, I've still yet to see anyone bring up the possibility of lawsuits due to disparate impact with certain subsets paying more versus others. A very valid point now, right? Buyers agents can charge whatever the hell they want for their services. The old school 3%, $495, something in between. The compliance aspects of disparate treatment, maybe that people of different classes getting charged different things. And either of you heard or seen anything about that?
Yeah, so I interviewed James Dwiggins yesterday, who is the CEO of Next Home. It's got like 6,000 realtors that are part of Next Home, 600 offices. And yeah, he thinks there's going to be multiple lawsuits over multiple things. And he didn't use the term desperate impact. I think that's more of a Mitch Kiner mortgage term, but he described it in a way that yeah, there's going to be lawsuits on that. And he kind of thought that it would take a year or two to really kind of figure this thing out, between more lawsuits coming down the pike in the industry, figuring out how to play in the new norm. But yeah, that makes sense to me that'll be a thing. That'll be an issue.
Rob, anything?
No, it hasn't come up. Maybe it's all too new or too conjectural. But I just saw that note flash up about somebody just took the quiz and got 100%.
There you go.
There
was an anonymous attendee, just for the record, though. So
no, but by the way, top mortgage people usually get 100 to miss 2. And again, but think about whoever took that. Think about one, giving that to any Gen Z, any non-owners that should get into home ownership sooner. And then think about giving that to some parents and seeing how the parent does, and then have the parent share it with their kids. That's who we designed it for.
good stuff. Well, as always, Dave, a great conversation. Really want to thank you for coming on the show. I always appreciate your perspective and insight, especially this time with the winds of change blowing hard as always in the mortgage industry. And Dave, of course, the founder of Mortgage Coach, which is just an incredible product and platform for home buyers. Talk about, setting people up for success the right way before they buy a home. There is no product that does that better than Mortgage Coach. Dave, now the Chief Innovation Officer with Trust Engine, Mortgage Coach, now part of that family. And of course, First Home IQ, which we talked about. So Dave, thank you very much for joining us.
Thank you. I love that.
Yes, thank you very much, Dave.
Yeah, thank you. And I love what you guys do. So thank you it's always real talk, straight talk, and a lot of mortgage shop talk. I love what you guys are doing.
Thank you. Yeah. And Rob, thank you for joining us. Your 6th conference in the last 10 days? You're the road warrior.
We'll take a little break, I think. We got Labor Day coming up. I don't need to go anywhere for a bit. We
And to
give
our
this quiz
attendees,
to my granddaughter.
that's right, the little one who's been on the show before, adorable. So, and to our attendees, if you're listening to this on the podcast, where the majority of you listen, we do the show live every Thursday at 3 p.m. Eastern. You can go to the CrismanCommentary.com to sign up for that. This is part of the Crisman Commentary Network of shows, and also release this as a YouTube on the Crisman Commentary YouTube page. So until next week, have a great rest of your week and weekend, everyone. And we'll see you next Thursday at 3 Eastern. Take care, everyone.
Thanks, Dave. Thanks, Rich.
Yeah, everybody.